Some other things happening in the rental market: interested buyers are beginning to wane due to the price and interest rates. Because of this, the housing market should provide opportunities for smart rental investors, okay? Don't get caught up in the drama of the mediocre majority, okay? The media is going to spin this thing and it's going to be a bloodbath. Don't buy into it, okay? Just watch the trends, watch the market, keep a level head, and there's going to be huge opportunities that did not exist even 30 days ago. It's going to be very interesting. So why rentals? Okay, Lee, why now? Well, when the market's crazy out of control and you got all these cash buyers coming in from out of the woodwork, no seller in their right mind is ever going to consider any type of creative seller financing strategy because they don't need to. They can simply put the house on the market and in a couple of days have an all cash offer for higher than list price and get all their cash and walk. So as an investor, it doesn't make any sense to buy rentals in that crazy market. But as the market is turning, you got to understand some things about rentals, okay? So according to Yahoo Finance data, the home rental market is booming. The average apartment renter is now earning, on average, $70,000 a year, and wages of renters is rising strongly at 3.3%. Now, often when we think about tenants, okay? When you think about a tenant, do you think about a professional who's making $70,000 a year paying you rent? No, that's typically not what we think of when we think of renters. We think of renters as, people with bad credit and sporadic jobs, and, they're in the trades, and so their income is sporadic. The real estate agent, the mortgage broker, the contractor that can't seem to get their life or their financial house of cards in order. That's who's renting. That may have been the case 20 years ago. It is not the case today. The case today is that professionals are renting. Why? Well, when you combine that with the fact that more buyers were shut out of the home purchase market, the vacancy rates are not going to be falling in 2022 or perhaps the next 5 years. Look at this graph. Rental vacancy rates by region in the United States from 2000 to 2021. Now I want you to look at the spike, okay? These are vacancy rates. So when it goes up, more and more properties are sitting vacant. As it goes down, fewer and fewer properties are available to rent. The highest spike we saw was between 2009, 2008, and 2010. You guys see where it peaked? Look at what has been happening ever since. A steady onward march declining. Now, a lot of people want to attribute this to the millennials. It is not millennials driving the vacancy rates in housing on rentals. It's actually the baby boomers and retirees and seniors that just don't want to have to deal with property upkeep, property maintenance, tenancy, having to fix stuff. When you rent something and the water heater goes out, all you do is call the maintenance guy or gal and they show up and they fix the water heater and you don't get a bill. When you own real property and the furnace goes out and you call the furnace person and they come out and they put in a new furnace and they write you an invoice for $8,500, that's coming out of your pocket. So a lot of those in fixed income status, i.e. retirees, seniors, prefer the consistency of renting over the volatility of property ownership. So when you think of it from those terms, it actually makes sense that we're seeing a decline in available properties for rent.